So what we're going to do first is we're going to put on a bread and butter trade in this bread and butter account. We're going to do it in the ES. We did a trade in the bread and butter account yesterday to start the year. We're going to kind of double down on that trade and then add something to the call side. So what we're going to do is go to this 45 days, and I had this geared up a little bit. We go to 45 days on the toss, the Thinkorswim platform, and then what we're going to do is add a put spread. Since it's down today, we're going to add a put spread to this put spread we already have by clicking on the bid and then by holding down control and clicking on the ask to buy here. So we're going to change that into 2 contracts, but this time we're going to create an iron condor on this trade, and we're going to go to the 5100. So we're going to try to go really far away on the call side, but we are going to add that call side to get a little bit more premium, but do it in a very safe way. And we're only going to do a 40-point wide here. So the put side is 100 points wide. The call side is 40 points wide. So it's skewed by delta, and it's skewed by the width of the trade of the spread. So this is the kind of the standard type of Dorian Way iron condor that we do. It's normally skewed by at least the width of the spread on the call side is usually less than the width of the spread on the put side. But we also try to, and when we're being careful to that call side, because the market has been drifting up, we try to usually go no higher than a 7 delta on that call side, just to give us a little bit more breathing room if the market continues to go up. On the put side, you can see we're still very far away, over 600 points away. So this is still a good trade for us on that put side, and it's only a 6 delta. So what we're going to do is see if we can get filled on this. We're going to send it at the mid here first, and then we might drop the price just a little bit, see if they'll give it to us. All right, so we're going to go over here, and we're going to look at at what it's trading at right now. As you can see on this Thinkorswim platform, we're asking for 355. The mark right now is 355. So if you are selling something and you want to get filled and you can't get filled at the mid, you have to lower the price. Okay? And if you are buying something and you can't get filled at the mid, then you have to increase the price. This time we're going to lower the price just a little bit and see if it'll work. We're going to drop this down to 350, and we're going to let that sit for just a quick second and see if we can get filled. And we have not, but for demonstration purposes, we're going to lower it a little bit and try to get filled. We're going to put on a different trade here in a second, so I might let this sit once we lower it just a little bit more to the 345, and still getting at least 166 there. So we just got filled. All right, so that's what's over here. We just got filled. So great. Now we have on. It looks like just one trade, but it's 2 trades still. We put on a hedge on it yesterday. This is our hedge position. Now this iron condor is inherently already hedged, so we're gonna just keep it the way it is. Sometimes we kind of double up on an iron condor and actually hedge the put side, so we can really protect ourselves, trying to be super conservative. But in this case, we're just going to leave it like this. We think this is a good trade that we can make some money on within the next 45 days. I consider this a top trade, a bread and butter top trade. So if you want to copy this one, I encourage you to do so if you have the buying power to do it. Okay, if you have the resources to do it, then yes, you can do this trade. This is for everyone, new or experienced. Right? All right, but this next trade that we're going to go over is not for everyone. Okay, this is more speculative. We're going to jump into the speculative demonstration account, and we're going to do something speculative. Please, if you have a question, wait just a second, and then you can present the questions regarding that trade we just did, or this speculative trade that we're going to look at. Okay, I promise we'll have enough time for all questions. All right, so what we're looking at here is the NASDAQ is down almost 2%. It was down just a little over 2% a few minutes ago. We're going to look to do a short-term speculative trade being bullish on the NASDAQ, okay? Just something short-term. So we're going to look at 2 options, and then we're going to determine which option is better for us. So we're going to go into this QQQ, which is the NASDAQ ETF. It's an index that trades like a stock. It's like a mutual fund that trades like a stock. That's what an ETF is. And we're going to look for the 17 days to expiration. So normally with the Dorian Way, we trade between 30 and 60 days, or we're doing something long dated that Ernie teaches us. But in this case, we're going to do something short term, right? So sometimes we do things short term. Dr. Meadows, that you on the Discord, you can see him doing a lot of short term stuff, 0 DTE. That's DTE is days to expiration. This time we're going to look for 17 days, and we're going to compare that against the 18 DT, or excuse me, the 8 DTA, 8 days to expiration. All right, so let's look at this here. What I'm going to do is a somewhat of a custom type of spread. I'm going to buy the call side at the 397, which is right now a 43 delta, and I'm going to buy the, I'm going to sell the 399. So that's going to cost us, if we just did this, it's going to be a debit. It costs us about $92, give or take, depending on how we get filled, and we have a max profit of 108. And so this is basically pay one to make one. Okay, this is how we like to buy things. Usually, if we're going to buy something though, just by itself as a standalone type of trade, we're going to be at the money at this 50 delta or a little in the money. So we're going to usually be around this area when we're going to do it. Okay, but this time we're going to actually try to get this call spread for free. So we're going to be a little bit more aggressive than what we normally do. Normally we sell a put spread no higher than the 15 delta. This time we're going to look to sell the put spread a little higher. So if we sell this put spread at the 380, which is a 22 delta, as you can see there, and we're going to buy this. Actually, I'm doing it this way. We're going to sell it really high. So we're going to sell it at the. I think I did that wrong. Let me see here. Let me just double check here. 380, 370, 377. That, and then do 2 contracts here. 1 second here, everyone. Do 2 contracts. That's a debit, so we're gonna have to go up a little bit more. So if we did this, that would be a little credit, and then if we went to the 382, this is where we need to be. That's gonna be a credit if we can get filled. So in this case, we're gonna get $10 to $11 before fees and commissions. Someone's gonna give us that, and we have the potential to make as much as 210 with a buying power effect just under 600 or 590. So the way it looks on this curve view, just really quickly, everyone, let me try to make this a little wider so everyone can see. All right, so this is the at the money line. If it goes up and it goes past this short leg on the call side there, that's where we can make our most. If we hold this to expiration, that 210, we're not going to hold this to expiration. If it goes down, then we can still make at least $10 based on what the credit we receive, right? So this is a directional play. It's like buying a call spread, betting it's going to go up. You got a 50-50 shot. But in this case, we have a higher probability of winning because we are getting the call spread for free, and we're selling the put further down that it has to, this put spread, we're selling the put spread further down that it has to fall. So this is giving us a higher probability of winning. We have a 75+% chance of still winning on this short-term trade, right? So this is 17 days to go, and that's at a 25 delta. Keep that in mind. The put side, that's where we start getting breached, is at the 25 delta on the put side. So if we clear this and then we go into something even shorter and go into the 8 days, the expiration, as you can see here, and let's set up the same type of trade, but let's see if we can get it a little better. So we're going to buy the 395 by clicking on the ask, and then we're going to sell the 397 by clicking on the bid, and then that's going to cost us $89 or $90, still basically 1 for 1. We got a max profit of 110. Then we're going to go to the put side, and we're going to sell the 387. So this is the 27 delta. The other one was the 25 delta, and we're going to buy the 384, and we're going to do 2 contracts there. Okay, so we're going to try to do this for a credit. So, and if we do this now, this one right here is going to be potential buying power is a little cheaper, about $15 cheaper than the previous one. We can make a few dollars more on this one, and the credit is about double, right? So we had a $10 credit before fees and commissions. This is a $20 credit before fees and commissions, right? So this is the trade. It's the same setup as we just did. It's just shorter term, and the delta is obviously a little higher. It's 3 points higher here, but we still have a high probability of winning. We still have a at least a 74% chance of winning on this trade. I think it's actually maybe a tiny bit higher than that, but let's see. Let me just show you this one more time. Actually, that's a little too high. I messed that up. Let's see if I can fix that. All right. Let me go a little wider. There we go. All right. So this is once again the same type of trade. This is to have the money. If it goes up, that's where we can make the most of the trade. If we hold to expiration, we're not going to hold to expiration. We're going to try to get out of this at 50 to 100% gain. So that's, and I want to try to get $100 out of the trade. It's nothing, nothing, out of the world, but it's still a short-term trade betting the NASDAQ is going to jump up within the short period of time. So once again, this is a speculative trade. This is not what we try to, have consistent profits on. That's the bread and butter type of stuff. That's the 1 day a month type of trading account. This right here is a way we're just trying to get a little bit more in a short period of time. All right, so I like this one a little bit more than the other one, but the other one had a little bit, gave me a little bit more room to wiggle room because it was the 25 delta and not the 27 delta. But we're going to, I'm gonna do this one with the 8 days, and we'll see how it plays out with the Fed numbers, the Fed information coming out later this week, and then we got the unemployment numbers coming out on Friday. So if we can get a little push, we'll be in and out of this trade, and I'll let you guys know in Discord when we're out, in and out. But we're not going to force this. We're going to put this in. If we get filled, I'm going to put it in at 22. If we get filled, then great. If we don't get filled, then that is fine as well. So you can see we're getting a credit of $15. I'm going to sell that, and we're going to see how that plays out. All right, so I'm not going to force it. Once again, this is the working. If we get filled, it was fluctuating. If we get filled, then great. If we don't, then we're not getting what we want on the trade. So we're okay with that. All right, so let's open it up for any questions regarding the trades we have, or any questions regarding anything at this point.